This week, we have seen platinum prices, they've broken out 5% to the upside. So we've taken the opportunity over 5 trades this week on platinum with a breakout to $970 per ounce to bank 2,000 points profit with our clients at the Gold and Silver Club. So of course, you know that calculation. Every 1 lot contract you be trading, that's $20,000 of profit. Every 10 lot contract you be trading, that's $200,000 of profit. Alongside that, we finally have oil prices breaking below $80 per barrel, gold breaking below $2,300 per ounce, and silver breaking below $26 per ounce. Everything that we expected with you after we saw speculators all FOMO in much higher into these assets over the month of April, getting sidelined and eventually capitulating and getting involved using their outdated technical analysis and trend trading strategies. And essentially, as we discussed, they've now got rugged. We talked you through this previously. Expect this. Now that a lot of the speculators, they're bought in much later into the move, this is a warning sign for gold, silver and oil that typically you are going to see them take the elevator down after taking the staircase up throughout February, throughout March and into April. The trap was all set and now that has all played out to expectation. So what have we been doing in the meantime here? We've taken the profit on platinum over this week and we started to rotate it into palladium here at the swing lows. You've actually got palladium over this week. It's been ricocheting between $980 per ounce down towards $930 per ounce. You've taken the opportunity this week to stack into positions aiming for best possible price on palladium. I of course like it. Palladium sub $1,000 per ounce, but I like it even more at $950 per ounce. And of course, I'm going to like it even more if it does drop back down towards $900 per ounce. Note on palladium at the moment, it's actually cheaper than platinum. So we reach parity with both of those metals at the start of this week. Historically, when platinum and palladium prices, they reach parity, oftentimes this is not going to stay for very long at the current prices for both of these metals. Palladium, we've already started to see it get a bid around $930 to $950 per ounce. I would welcome lower prices, but I don't know if we're going to get it over the course of this month. In fact, my overall expectation is that over the course of this month, palladium prices, they'll be trading back above $1,000 per ounce. Just rinse and repeat, buy low, sell high on this market. We've already seen exactly that play out with platinum. Again, platinum prices, they've bucked the trend over this week. You've got gold tanking, silver tanking, crude oil tanking, palladium selling off, whereas platinum has broken out 5% to the upside. So again, this just enabled us to scale out of actually 5 trades, banking 100% on those positions, then locking in 2,000 points profit on those trades, which of course that has worked out perfectly in order to scale out of more profit and then rotate that into other commodities which are currently selling off. Now this came back to our point that we've been discussing with you on the week ahead commodity report and last week as well. You want to of course understand the capital flows in the market, how the institutions are positioned versus the retail versus the speculators in the market. This is going to help you massively. Now 3 major news items that you want to be aware of now. Friday's non-farm payroll. Then as we head into next week, it's actually going to be a public holiday in the UK. Normally when there's a public holiday in the UK, you can see a post sell-off after that on the Tuesday. We'll see if that plays out. Then as we go into the following week, we have the CPI data, which is typically a huge catalyst for multiple commodities. The game plan right now, as it relates to oil, gold and silver, now they're starting to tank as we expected. I am looking at opportunities now, particularly on oil, if it breaks back down towards the swing lows. I'm looking at the same here on silver. I do like it as it breaks down below $26 per ounce. I want it lower in order to add further exposure, but it's doing exactly what we expected it to do. Gold is the same here. Our expectation had been that we'd start to see it roll over, take the elevator down and flush out all of the late speculators in this market, which has been many, right? Over the course of April, we talked you through this, that over 85% of speculators had gone long on both oil and gold. This isn't good for that market, that oftentimes you're going to then see it get rug pulled. All of the late traders, the late trend followers, anyone who got sidelined and bought in late, normally you're going to get punished for that. That's exactly what we're seeing right now on those markets. So of course, this really does come down to understanding data, statistics, market intelligence. You want to learn and understand the capital flows in the market. That will help you massively, especially if you align that with the daily, weekly, monthly, quarterly, real-time, data-driven cycle with each commodity. Further compound that as well with the intermarket correlations, the ratios for each commodity. Then, of course, the macros, the fundamentals, the geopolitics, and how the hedge funds, the money managers, the banks, the institutions, how they're all positioned in the market in real time. That is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.